Hey everyone, and welcome back to this week's Good Till Canceled. We apologize for missing the last few weeks. I had some exciting life events happen. I actually had a baby boy that was born 11 days ago, 12 days ago. I don't even know. It's been a whirlwind of not sleeping and in and out of the hospital. So yeah, welcome back to this week. Everything's good. The baby and the mom are healthy. 8.5 pounds, 22 inches, a little bit of a beast.
There you go.
Yeah.
Well, congratulations. Glad
Thank
to
you.
have you back. And,
Yeah.
look forward to having you in the office now. And
Yep. I'm
although
back. I'm back to
a
work.
a little bit more tired than usual, I'm sure,
Oh
but
yeah, I'm operating about like 68%, I would say.
yeah. Okay. Well, that's better than expected. So,
Yeah, yeah. All right. Well, let's get into this week's topics, which is good transition. And I actually think it might have came out the day my kid was born. Coincidence, I think. The child tax care credit has gone live. So for those of you who don't know, this was part of that $1.9 trillion coronavirus relief package that was passed in March. So previously, the child tax care credit, you only got that at tax time if you owed money, right? That's kind of what a tax credit is. With this, you get it no matter what. And it's also different. So it's now $3,600 per child. I believe it changes, it's 0 to 5, it's 3,600. I think it gets reduced 5 to 17. And then beyond that, you also have the option of taking monthly payments of up to $300 per kid, or taking it all at once at tax time at $3,600. So that's also, that's a new feature. People are getting access to the money now rather than waiting. There is a phase out limit, just like there was before. $150,000 for joint filers, and I believe it's somewhere around 75 for single. So yeah, I mean, it's a pretty interesting thing. I've actually had some people ask me already, would you do the monthly payment or would you do it all at tax time? I think it's going to be, I think a lot more people would take the monthly payment, right? It would make more sense, you would think, to get that $300 a month than it would to just be wait and collect it all with no interest at the end.
right. Yeah. You think about people's bills
Mhm.
and things they have to pay for, and
Right.
the kids can't not eat for the whole year. And,
Right.
so it probably makes sense to do it on a monthly basis. They say the new monthly payments on average will be about $423 a family. So obviously that's factoring in more than one kid.
Right.
And this is just for 1 year. Is that correct? And then, but they're pushing, I guess, to have this be more of a permanent.
Yes. Yeah, they're
Okay.
trying to make it more permanent. It's almost looking like it could be like a form of the universal basic income, right? For lower income families. I believe it's up to 4 kids you can do it.
Okay. Right.
Which is, I mean, it's pretty nice. 4 kids at $3,600 a year.
Yeah.
Pretty nice. Yeah.
Yeah, there's a few articles that talk about how some people that have been struggling and may not actually have owed taxes in the past, weren't really eligible for this. This is going to go a long way for kind of helping them pay for the things that they need to help raise their child. And a lot of people are going through a lot of difficult times right now with the coronavirus and employment, and there's a lot of situations that we're not aware of out there. But I think this will go a long way, and it should be interesting. So this is very pretty new, but the IRS website does, which we'll link to in the show notes, does have a lot of very good information on this. So please go visit that or call an advisor if you have questions more about how to get this or when payments will be coming due. I think that they have on there, we'll post pictures, payments basically should be coming out at the 15th of every month. So, around the middle of the month, maybe expect those payments.
Yeah. And I think, there's like a portal you can go into to log in. Even if your kid was born this year, you're eligible to start receiving the payments now.
Yeah, exactly. So you just have to go on and refile because they're using last year's tax statements to kind of determine that. So you just have to kind of refile your situation with them, and they'll take that into account.
Yep. So,
all right. So
Chris, would you spend, quick question, would you spend $250,000 to go to space?
No, I wouldn't. No, that's a lot of that's
And
that's a lot of money.
Is it really space? I know it's considered space, but
All
there's
right.
planes that have gone that high. Am I right?
So,
Yeah.
I did look this up because I
Yeah.
was interested. There's a lot of different versions of this. So, what I read was that technically space begins at 264,000 feet.
Right.
Okay. Uh, so as we know, there's been a lot of the space talk in the past couple of weeks, right? Virgin Galactic,
Right.
launched their VSS Unity spacecraft shuttle.
Yeah.
And they did that. They were the first ones to really kind of breach that threshold and go into space with Richard Branson and a couple other people from his company. So, and then not shortly thereafter, Blue Origin, I think their craft was called the New Shepard, went even further. I think it was, so it says 65 miles or 343,000 feet. So technically they went further and higher, and they also went past so there's, again, the technical place is 264,000 feet for space. And then apparently there's another technical line called the Kármán line, which the Blue Origin went past. So right now they hold, they got the one up on Virgin Galactic, but Virgin Galactic obviously went first. The whole idea of this is pretty nuts. I mean, we have Virgin Galactic, Blue Origin, and SpaceX are really like the three main players in this space industry. Right. Which there are, I guess, ETFs now that are actually out there tracking this, right? Yeah, UFO is one of them. ETF. But these companies are very different in kind of what they're doing, which is interesting to see. Which route is really going to be the most beneficial for the company and for growth really long term. So Virgin Galactic is really going to be a space tourism company. That's all they're really doing. Yeah. And like Alex said, it's a 2.5 hour, right? Their idea is going to be a 2.5 hour round trip to and from space, which is going to cost $250,000, right? So I don't know that many people that just have $250,000 to spend on a 2.5 hour trip. Going to space, or if those people that do have that money even would want to go. And then after you do go once, how many times are you going to really want to do it again? Like we start bringing friends along, and it starts getting
to be like your yearly short trip. It's like, we're going to space. What week are you going? Now we're going the week of July 1st again.
The rich people short trip. I mean, you're talking about you want to bring 4 people, it's $1 million. So
and by the way, that 2.5 hour trip, I think comprises of what would they say, like 3 minutes of total weightlessness. So you're at zero gravity for only 3 minutes. So you're feeling like you're in space for 3 minutes out of the 2.5 hours for $250,000.
Right. And can you even take your seatbelt off too? Like, are they going to just have like 5 people just floating around this aircraft without seatbelts? So we're just going to be like, all right, well, loosen it up a little bit and it'll let you like float.
There's just so many questions to like, what are the margins like on this? Right. So all right, how many people are getting in? Like, it can't be cheap to just continually going to space. I mean, how much money are they really going to make? It'd be interesting to see an earnings call after their space, I mean, because another thing we had talked about in the past, when it comes to space play and in terms of investing in companies, the real money probably lies in companies that, and again, this is probably decades from now, we're not even close to this, companies that are able to go into space and maybe mine asteroids, right? Because they find, there's there's asteroids out there that have more gold and natural resources than we have on Earth. They're completely, comprised of gold, silver, all these things. So, maybe that's a play with space, but the space tourism, I just don't see how that's gonna be a huge revenue driver. It's cool. Right. It's cool to say, right? That's why Bezos did it. Bezos isn't doing to make money. He just wanted to look cool.
Yeah.
So I put a cowboy hat on, right?
Well, yeah, this is just like the battle of the billionaires, and Virgin Galactic is right. So there's basically like a one side, another side, and in between. So Virgin Galactic is like totally reliant on space tourism, or mostly reliant on space tourism. You have Blue Origin, which sits somewhere in between, right, where they're talking about being what's it called, space tourism for a good amount of it, but they're also bidding on these like government contracts to take people to and from, or astronauts to and from the moon, or launch rockets or what have you. And then SpaceX, which is not talking about tourism at all, but you have Elon Musk wanting to colonize Mars. He's talking about, they do have repeatable government contracts that they have. They have, the big thing have been those reusable rockets that they've developed.
Yes.
They already do shuttle people to and from the International Space Station, right? And then they won a bid against Blue Origin early this year for the moon taxi. They're talking about carrying the astronauts back to and from the moon for 2024. So, there's like a wide variety of like ways to make money. It seems like SpaceX is probably like the most profitable.
But they're a private company.
Yeah, and they're not profitable. I don't know if they are or they aren't profitable. I can't imagine that they are, but
they're not a public company anyway, so you can't invest in them.
Right. And Blue Origin obviously is its own separate company outside of Amazon. But how about this guy for Blue Origin for
it's insane.
Going? So when they went to space, they had 4 different people on there. They had Bezos's brother, another older astronaut who I don't think ever got to go to space, or maybe she did or something happened, and then they were auctioning off a ticket for the 4th spot. And then the guy won, paid $29.7 million for this ticket.
Yeah.
And then a few weeks before it couldn't go.
Yeah. It's I paid $30 million to go to space, but like, oh, my daughter's a little league game. I forgot about that. I have a schedule, or I forgot I have a bar mitzvah I got to go to. I mean, I can't imagine. I don't buy that at all. Like I said before, I think if they were trying to save face, I think Bezos might have sat down and said, this kind of looks bad that we're having someone pay $30 million to go to space. Maybe we should take someone else. What meaning gets you out of going to space for? And
that's gonna be worth more than 30. Yeah,
got to get refunded the $30 million. Like, does he get that back?
I think that they said that he's going to be on a future trip.
The whole Bezos thing, the whole Blue Origin thing was just crazy. It was hilarious to watch. Bezos tweeted a picture. Look at this incredible view. I don't know if you saw that. The view was horrible. It looked like he took a picture of a cloud.
Yeah.
I was like, he could have not been in space and took it. I could have taken that same picture.
Somebody's got to explain.
If he comes back down and he puts a cowboy hat on.
Yeah, well, I didn't understand the cow. I guess because they were in Texas, but
space cowboy.
Somebody's got to explain to me how he shows up 30 minutes before going to space.
Yeah.
On his like own rocket that he built, but like we have to show up.
2.5
hours for a domestic flight, or 3 hours for an international.
Yeah, I still can't even get free TSA pre-check. Yeah, it's a disaster. We're just normal people, though. He is not.
Right.
So there was a bunch of funny tweets going around. One person said, "Does it concern us that one of the wealthy, like some of the richest people in the world, are trying to actively leave Earth? Should that concern us?"
Well, I kind of had that same question too. I just said, like, are we really done with Earth already? Where they couldn't have just figured out a way to get all the trash out of the ocean.
You can't even get where's the high speed rail system that we're supposed to build? We're just going to the moon now instead.
Yeah, we're
just up on that.
Like we went from 0 to 100 so quick, but apparently, so Morgan Stanley estimated that the space related revenue, I guess, could triple by 2040 to over $1 trillion. I think this is just this is my personal opinion. I just think this is one of those things that will and could eventually be something investable and worthwhile to be investing in. But there are times when you can be too early to a great idea, right?
Yes.
You can be much, much too early to something.
A lot of companies in 2000 were too early for
and not make any money, right? I mean, there are many, many examples, and I think this is probably one of those things where it's it'll happen, and that it could or might be profitable down the road, but we haven't even gotten self-driving cars yet, right? And we've been talking to that for the last 25 years, and so to make that leap, right? And that's been a big investment industry to make that leap now to start investing in space trips, like. Yeah, right. I'm not sure. I mean, maybe again, like you have this kind of this SpaceX side of things where they're actually government contracts, and there's actually
I believe in the government contracts because the government will spend money. They'll pay companies to do things that they can't really do because it looks bad to be spending taxpayer dollars going to NASA. That whole thing, they kind of defunded that over the years, and it looks like we're going more towards a privatized space exploration industry.
Right.
I believe in that, like the whole government contracting and exploring space. The tourism, I don't buy. don't buy how that can be super profitable. Maybe I'm wrong, but we'll see. All right, what do we got next?
So maybe some of those SpaceX employees will want to spin out some of their shares. So the NASDAQ is going to spin out its market for pre-IPO shares in a deal with a bunch of different banks. So basically what's happening is NASDAQ has a separate company, NASDAQ private market, and it's going to be it will be moved into a separate standalone company that's going to receive investments from a number of different banks, and they're going to get these investments from their clients, who are going to be people that work for pre-IPO companies that need to make their shares liquid or need money for some reason, right? So a lot of these companies, and kind of flows into the next thing we're going to be talking about, a lot of these companies have waited longer and longer to go public, and their employees are compensated usually in stock and company stock that's very illiquid and not marketable. So a lot of their net worth is usually tied up in something that they can't actually access, and it's not liquid. So a way that they do it is they sell some of their non-marketable, illiquid pre-IPO shares to these investment banks, and then the investment banks kind of sell them to accredited investors, right? So that's basically what's happening. And I guess NASDAQ, it's felt like it's been a big enough market and big enough shift that it makes sense to actually spin this out in an entirely separate company. Yeah. So the main banks are like people who you would think about, like Citigroup, Goldman Sachs, Morgan Stanley, SVB Financial Group, which is Silicon Valley Bank, and a couple others. The thing to note about this is that if you're interested in this, that it's still going to only be to accredited investors, which means that you basically have to have more than $1 million in investable assets, or I guess an income of more than $200,000.
Yep.
But again, this means that there's been enough of a demand, both from those types of investors and then also enough of a supply need because of the constant amount of or the longer wait periods before companies go public. And I guess the bigger and bigger they get, the more employees they have and the more company stock they have. So it is interesting to kind of see this market start to play out a little bit.
Yeah, I'm interested in a few things. I'm interested, one, for the investors, what kind of research will be available to them, right? Or information on the company, right? Because these are private companies. People don't really have access to the fundamentals. They don't have access to their financials. They don't have access to any of that stuff. Will these banks be able to get that stuff and make it available to the investors? Or people are just going to be buying shares in companies just because they like the idea of what they do.
Right. Well, yeah, it will be interesting to see. I'm not, the business model already exists. They're just kind of spinning it out as a separate company.
Yeah.
Usually the reason that people, have to be accredited or have certain salary requirements is that there are less provisions for that type of stuff. So they're not as worried about the blowback from those, because it's kind of like you're taking the risk in your own hands, whereas they take the buyer beware approach versus for the smaller people that don't have as much money to invest. There's a lot more rules and regulations around those to kind of protect us smaller folks. Yeah.
But have you looked into like the pricing of these securities at all? Like, are they selling at giant premiums? What kind of fees are they looking at? Who's setting the prices, right? Like, I know obviously the banks are probably, the intermediaries are probably setting the prices, but it's not like a stock, right? It's trading, it's supply and demand, right? That someone's setting the price of these.
Right. Well, yeah. So pricing can be sporadic, right? We're talking about pre-IPO shares, illiquid, not marketable, probably a big discount you're taking from what, like, these things aren't valued very often. So they have thin volumes, there's high fees and widespread. So again, kind of a buyer beware approach. A lot of the paperwork requirements are going to be, back and forth between the banks and the individual people offering their stock, and then obviously the client buying it. But to give you an idea of just like the kind of demand that's actually out there. So there have been 57 private company secondary transactions. It's totaled, I guess, about $4.6 billion in transaction value, which is the highest that it's been in the last 3 years. So we're in a time period again where people start needing liquidity. People want to go out that risk spectrum. You think about, well, now I can own bonds, I can own public equities, I can own, private equities. That's the kind of the next leg up for people. So I think it's a good idea for NASDAQ, and I think it, kind of meets a demand that's out there.
Yeah. Well, and I think that transitions nicely into our next topic about the unicorns, right? Because I think, that has a lot to do with it.
Yeah, this is crazy. So this definitely has a lot to do with it. So unicorns, for people that don't know, is basically a private company that's worth more than $1 billion in total right now, all the world, right? There's, I don't know the exact number of unicorns, but they're now valued at $3 trillion. So this is private companies worth more than $1 billion in total. Their total net value is worth $3 trillion. And that's up $1 trillion since last year. So it's pretty incredible to see, again, these companies, the continued growth that they're having, especially last year with the COVID pandemic and kind of their resurgence now, and the people's new appetite for risk, and just the amount of money that's out there is really kind of booming this industry. So there are, there's right now, there's 900 company startups valued at $1 billion or more, again, totaling $3 trillion. And that's up from June of 2020. From just July 15th, there have been 291 new unicorns this year. So 291 new $1 billion private companies. $1 billion is a lot of money. It's not a small, like, micro cap company. So these are big companies that are coming about. And some of the biggest players are names that you would think that are in that market. So I think the SoftBank Vision Fund, they the Sequoia Capital, there's Tiger Global Management. These are the biggest players investing in some of these funds and kind of bringing them, or working on trying to bring them to market eventually. I think that's maybe the goal. As an idea, so 291 new unicorns this year, 57 have actually gone public this year, while 5 have actually been acquired. So in 2020, only 40 went public, and 18 in total were acquired. So this market is certainly booming. It's going to become a bigger and bigger piece of everything, especially with it's just interesting to see, like, the number of public companies just has been decreasing over the years. To see just how, like, the kind of divergence between the public and the private markets.
I mean, I think if you look to it doesn't really surprise me as much, because I think if you look at human history, and when you have things like COVID happen, right, where it alters the course of humans' presence on this planet. When you have things like that happen, the amount of new businesses and new technology and new ideas, new revenue streams always pop up out of these things. So I think we're just going to keep seeing things like this, right? Just these unicorn companies that come out. And then when you have, and again, I think we're having some asset mania going on, right? We've seen it with the NFTs, we've seen it with cryptos, we've seen it in the stock market. More and more companies are going to see that and want to go public, right? Because there's just a demand for shares of these companies. Clearly the numbers say people are interested in this stuff, right? So, they're going to invest in it.
Right. And surprisingly enough, that over time, right, so people have always invested in private equity and private credit for a number of different reasons, but really, right, they wanted the higher returns and the kind of the lower risk that, or less volatility that non-publicly traded securities are going to give you. So but these funds that have been investing in this stuff have done very well over time. They continue to do well, they continue to grow. So it hasn't faded, and it's been a pretty good investment. So There's a few different vehicles that you can kind of access this stuff through. Obviously, you can do it individually as well if you're an accredited investor, but it's definitely worth looking into as far as a piece of a portfolio. I think it makes sense for different people. Yeah,
long-term investors. Yeah. People that have higher risk appetites.
absolutely.
Yeah. Well, all right. Well, let's talk about our next topic. Let's talk about DAFs, donor advised funds, right?
Yeah. So what is it?
What is a donor advised fund? So a donor advised fund, it's a charitable fund, right? So let's just say that I have money, I want to donate to charity. I'm not sure what charity I want it to go to. I'm not sure when, I'm not even sure how much, but I want a charitable deduction now. Right. So let's just say in this instance, I have 100 grand. I want to donate to some charity out there. I open up a donor advised fund. I put the $100,000 into that donor advised fund. It is irrevocable. So that means I cannot get it back. But I get the immediate tax deduction on the $100,000 donated to charity. I can then do anything I want with it. Right. Obviously, I can't take it out, but I can dictate where that goes and when it goes somewhere. Right. So I could never give that money to charity ever. It could just sit in that fund. Right. And then my kids inherit it and then they dictate it. Or I could give $1,000 a year for the next 50 years. It really is. It's up, it's up to you. And I think, from when we saw a couple articles, we found people are, starting to target these because what does it say? They hold about estimated $142 billion right now in the United States.
Are held in these donor advised funds.
Right. And that money's not necessarily going to charity. Some of it does every year, right? But it doesn't all go there right away. And I think, these charities are sitting there, they're looking at that money, they're going, hey, we could really use that. Right.
So,
and people are getting tax deductions for that now.
Yeah. So that's been the blowback, right? Yeah. So 2020, a lot of these donor advised funds held a lot of assets, and they didn't actually pay anything out to these charities. So they're basically saying, well, it's just a place for rich people to put, money that's quote unquote going to go to charities so they could take the tax deduction and then invest it, because you can invest in a donor advised fund. Right. So you can contribute cash, you contribute securities, and then you have certain investments that you can, help grow the money if you want to, or you can just, again, donate it right away. But the money's just sitting in these accounts and it's not doing anything. And especially in a time of 2020 when, this money would have been, well needed, and it's not being used. So there are a couple bills that are coming out to try to, possibly, or they're discussing kind of reforming this process around donor advised funds. So one, possible solution that they're coming up with is that you get the immediate tax deduction as soon as you donate the money, but then there's rules that you have to actually donate to charity within 15 years, which seems pretty fair. I mean, like if you're taking a tax deduction right now for the full amount of that, and you can,
if you're using these strictly to, get a deduction, right, and keeping the money from charity, that's tough luck. I'm not going to talk bad about you, but, I think the idea of a donor advised fund to me was always, I want to give to charity. I'm not sure which charity I want to give to. Right. And I have all this money. I'm worried if I give the money to this charity, they're not going to use it wisely. So I'm going to give them, a fifth of it every year for 5 years, or a tenth of it every. That's kind of what I saw. But so I think the 15 years would be fair. I think that gives you plenty of time to kind of figure out where you want to, again, if you're just using this just to avoid, to get a deduction and avoid capital gains taxes and all that stuff, and you're withholding the money from charity, you can't take the money out ever. You can't use it. It's not yours anymore, theoretically, right? It's the fund. So the fund is its own entity. It becomes that donor advised fund. So, I think some regulation in these probably, it could be beneficial to get the money to the charities.
Right. Yeah. So they're obviously talking about, well, you take the immediate tax deduction for the money as long as you agree to give it to charity within 15 years. The second one was delay the distribution of their money for 50 years. So you could put it in, not actually, distribute it to anybody for 50 years. But you get no income tax deduction until then. So you would be You'd still get to enjoy capital gains and estate tax savings. So again, that's another reason to do the donor advised funds, taking money out of your estate. And then, but you don't actually get any of the benefits for actually donating gifts or donating to the charity.
Right.
So no actual tax deductions.
Yes.
You know, to give the counter arguments that maybe, you know, restrictions aren't necessary is that, you know, they quote average annual payout rates for donor advised funds have hovered around 20%, much higher than the 5% minimum required by private foundations. So again, if you're comparing it to some of these other charitable organizations or vehicles used to donate, you know, again, donor advised funds have a lot of higher payout ratios than you know, private foundation where you have to distribute 5%, or a charitable foundation where you have to distribute 5%.
Right.
So, and then, you know, again, so Michigan, the Council of Michigan Foundation showed that 35% of donor advised funds distributed no money in 2020. So, I mean, that's pretty incredible.
Yeah. In a year where most of these charities probably needed money more than ever.
Yeah, exactly.
Right.
But donor advised funds, regardless, are still a great way to, you know, take income tax deductions for donating to charity, and a great vehicle to actually donate to charity. So
yeah, again, I think it's a great tool if you want to be charitable, right? You want a little bit of control over your charitable contributions, and, you know, especially for people that aren't sure, you know, if there's multiple charities they want to do, they just want to control it over the next 25 years. That makes sense, right? But again, just using them just to get the deduction, kind of, you know, it all sets the whole idea of giving to charity, right? It's a net. The deduction should be a nice bonus,
right?
Not
I mean, this just goes along with, I mean, there's going to be a loophole, right?
Yeah.
Really rich people have really rich lawyers and accountants that figure out very effective loopholes for different things to not pay taxes, and that's how it's always going to be. This is what it is, and, you know, constantly changing the rules. It's just there's going to be something else that comes about that people won't like, and at the end of the day, you know, the money will get distributed to charity over time. It may not just be in the best fashion, or people just wouldn't do it, period. You know,
right.
But it will be interesting to see how those, if any of those actual restrictions or reforms come into play over time. So if you guys are interested in learning more about donor advised funds, please just reach out or talk to an advisor that you trust.
Yes.
All right. So this is going to be an interesting one. We're going to do kind of like a hate it or love it. There's a new company. I don't know how new they are, actually. A new company called Swimply. Okay. And I know, Alex, this is the first time that you've heard about this. So this is the one I found. What do you think? Thoughts on this?
I said immediately, I'm torn between it's the best idea ever and it's the dumbest thing I've ever seen.
So this is,
I don't know which way I go. I think we have to talk it out a little bit, and maybe I'll come to a conclusion, but
yeah. So this is the Airbnb for backyard pools.
Yeah.
So think you have a pool. So you're a homeowner, you own a pool, you're not using it, or maybe you do use it, but hey, there's a bunch of other people around you that want to use your pool. Like people love going to pools on hot summer days. It's a great thing to do. So, hey, I want to rent my pool out to people to come and use for the day, a couple hours, what have you. And this has apparently been growing like a weed. So right now on Swimply, there's 13,000 pool owners in 125 markets across the US. There have been 122,000 bookings since the start of 2020. And hosts, this is the unbelievable part. Hosts on average earn about $5,000 to $10,000 a month doing this. And they charge anywhere between $35 and $50 an hour. So Swimply makes their money because they collect some money from the host and another 10%. So they collect 15% from the host and another 10% from the guest. You're talking about 5 to 10,000, possibly making. Now I know this is just, people aren't going to be swimming if you live in the Northeast.
Yeah,
but
it's good to have California, Florida, South maybe.
Even if you live in the Northeast and you have the winter months and you can only swim from May to August, you're talking about a pretty nice chunk of change if you can make $10,000 a month renting your pool out. Now, I don't know if that's every day and I don't know
Yeah.
how,
How many
but
people? Yeah. It's, I think where I love it is those people that have like a second home. Let's say I have a second home in Florida, right? I'm up here for the winter. Why not make some money on my pool down in Florida, right? That seems like a win-win. Um, Part of me that hates it is I know people that own pools and I know the extent they go to keep that pool clean. So inviting all these people that you do not know to use your pool, and I mean, let's be real, people are disgusting, right? People pee in pools, it's just it's a fact. People do it, people lie and say they don't, but they do, especially if it's not your pool. What do you care? So that's the part of me that hates it is thinking if I was a pool owner and all these people I don't know using my pool, that would kind of gross me out a little bit. Also, I mean, are they allowed to use your house? Because where are they going to the bathroom? Let's say they're there for 6 hours, right? Like, where are they going to the bathroom?
So it's up to the owner. The owner can do whatever they want, right? So it's a lot of the owners, I think, you're not renting out like everyone's pool is different, but for the most part, we're talking about like in-ground pools, nicer houses. Maybe they have a pool house,
right,
or they bring in something, right? So they have a grill outside or what have you, or, hey, you can go in and use the mud room, bathroom, or whatever. But I think that's kind of the way most of these people are approaching it. Also, they kind of mentioned that 80% of the owners are usually there when the guests are there to kind of watch over things as kind of a preventative measure. You have to think about the insurance liability aspect of it.
That actually, I just thought about that. One of the highest drivers of liability and homeowners insurance cost are if you have a pool, it is astronomical.
So the company does have in place a host liability insurance for up to $1 million in property damage protection policy. So
yeah,
it is, I think they've thought about a lot. So
yeah, I would imagine they would think about that because
I didn't even know that there was competition in this space. So apparently Airbnb, VRBO or Verbo, there's a company called Pure Space that also does this. It's pretty incredible.
Wait, does Airbnb doesn't do this on their own, do they? They do.
They do. Yeah. This is a part of their business. I think it's a small piece, obviously, just because of the market, but Airbnb.
I can't see that this market would allow for more than like multiple competitors, right? Like I can't imagine this market's that big where Airbnb doesn't just swallow up all the market share, right? Because they're Airbnb and Swimply. Like I don't know. Maybe Swimply goes public in the next 2 years.
Well, I think this is again one of those things that the market may not be big enough, but you have to have a pool, then you also have to be a person that wants to go to someone. So from my perspective, I think as a pool owner, I would love this idea. Like I don't care, come over, and maybe this is me saying this because I don't have a pool currently, but for me, like I'm not using the pool this weekend. Sure, come over. I'm sitting at the house. Pay me whatever, use the pool.
But $5,000 to $10,000 a month sounds great. That pays my mortgage. That makes me happy.
Yeah. I'll throw some extra chlorine in there afterwards. Like, I was going to clean it anyway. From the perspective of being a user of it, I just can't see myself. And maybe this is kind of like a younger man's game, but I can't see myself, getting my swimmies on with my seahorses, and then heading over to some random guy's house and just like cannonballing into his pool and just lounging by the pool with my wife and my kids.
Does it beat a public pool? Because I don't like public pools either.
I don't know, because I feel like it's almost like because if you're coming from the germ perspective, I think it's weirder than a public pool because you can go with friends and you have that, like other people are there with you. Instead, it's just you at this random person's house who may or may not talk to you, and they're really just like kind of watching out the window at you guys. And
I could see like younger, like people in their 20s, they don't own a home, right? And it's a hot summer day and their friends they go, what do we do today? Let's go on Swimply. Let's rent a pool for the day. Let's go have some cocktails. Let's enjoy ourselves. I mean, I could see that.
I like it. Yeah. Like I said, from the host perspective, I love it. From the,
I mean, I wouldn't do it. I wouldn't, obviously, but I know people with pools. So
yeah.
I can just go to
so last thing, I know you've had some time since you've been waking up at all hours in the morning.
Yes.
Olympics are on.
Yep.
What's the go-to Olympic sport here?
Personally,
watching?
I have been finding volleyball, both women's and men's, to be exhilarating. I don't know if you ever
Okay.
watched the whatever it is, 7-on-7 or whatever they play. I think it's
I watch it during the Olympics.
yes, it is, but it's exciting. I mean, it's all that swimming's always exciting. I fell asleep last night before Katie Ledecky won gold in the 1500, but I watched her lose to Titmus in the 200. That Titmus from Australia has been cleaning up in the short swimming events. Simone Biles is out, so that kind of sucks for gymnastics.
Not a big swimming fan. I like the crazy sports, so I like the stuff that you literally never watch, and also like soccer.
I like that, yeah, and I like that too. But the problem is, unless you have Peacock, you can't watch any of that stuff. They're only airing the big stuff. They're only airing volleyball, swimming.
I watched some fencing the other day. I watched US take the fencing. I watched some water polo. Water polo is unbelievable to me. I can't believe.
Yeah, I think that's one of the most boring sports I've ever watched. But good on that. It's insane how tiring that would be. You can't touch.
That's what I'm saying.
Yeah, that blows my mind. But I watch it and I think people are just going to drown.
Yeah, I don't know how they do it, but props to them. And
table tennis is fun to watch. If you get a good volley every now and then. Beach volleyball. USA basketball sucks, so I'm not watching that. The 3-on-3 basketball, that was brutal. I watched that. Oh my god, it was awful. I watched Japan versus I think it was like Sweden or something, or the Netherlands. I don't know, but it was bad. It was like a pickup game. People were just like jacking up threes and missing them.
Yeah, it just reminded me of college, like going with a couple buddies and trying to play a little basketball, and I'm like, okay, well, this is not very exciting. Yeah. So it was.
I know a little golf is on right now for the Olympics, but I can't figure out when it's on or how to watch it. I don't know the format too much of it. I know Morikawa is representing America with like Patrick Reed, Justin Thomas, and someone else just came in because
Shambo bowed out.
He bowed out. Yeah.
All right.
But other than that, thanks everyone for listening and watching this week. Please like and subscribe. We would really appreciate it. And stay on the lookout. We should be launching our first mini series shortly, looking at retirement. Something Chris and I spend most of our days helping people with. So we think we can bring a lot of insight into, retirement planning and getting ready for retirement. No matter if you're 5 years away, 1 year away, 10 years away, 20 years away, I think we can, there's some good insights in there. Other than that, everyone have a great weekend. Enjoy the Olympics, and we'll see you soon.